there's going to be a Nova Scotian artist playing at my conference.
Nice.
Who I personally had suggested. So the entire country of mortgage brokers and, lenders and industry partners are going to be there. And it's a Halifax band. Any guesses?
No.
Sloan.
Oh, is that right?
Big time.
Okay. I had another question for you.
Yeah, sure.
You like pumpkin spice latte?
I am not a coffee drinker, so I do not. I'm not a PSL type of person, but many people might think that I might be.
I like pumpkin spice latte. I think it's excellent.
Pumpkin spice latte.
Pumpkin spice latte. I've been turned on to it.
Really? So do you go to Starbucks now before you go up to the station? Because it's like literally
No. It's a once-a-week thing.
Oh, it's a little treat.
Kelly and I will go for a drive and we'll get a pumpkin spice latte.
That's nice.
Because it's a little pricey.
You know what? It's all good.
It's all good once.
And we're going to be rolling just to tee it up because I know we've had a lot of fun this show.
Yeah.
But if anybody's curious to know about November, it might be Movember. People are going to be fundraising.
Do they still do Movember?
Oh, totally.
Okay.
But November is also known as Financial Literacy Month.
Yes.
And you're not going to be able to get away from us in November.
No.
So we are doing our normal weekend show, which will be at the first weekend in November.
Yes.
And then Todd and I were going to be doing 2 live shows where we're going to accept callers live on the air.
Yep.
On November 16th and November 30th.
In my studio.
In your studio.
In
so
air traffic control.
That's where the real action happens. So
Yes.
if you want to call in and ask us a question, tee it up. November 16th and 30th. We'd love to take your call. I'm sure there's going to be probably hundreds of calls, but your wonderful producer will field them all, and we will get some of you live on the air. So
I don't know about hundreds of calls.
I think there's going to be.
Okay, I'm glad you're optimistic.
We have a lot of listeners.
we have,
and we have some fans.
We have a lot of listeners, and we do have some fans.
Totally.
But 100 listeners or 100 callers is perhaps not obtainable.
Well, we will take caller number 99.
There you go. All right, so Mortgage 101, your guide to home ownership. Again, we talked about all kinds of stuff. So I guess, Clinton, what do you want to do? What do you want to touch on to wrap things up?
Well, we're going to talk about, people that are in crisis. In this rate environment, some people are really having a hard time. Not everyone's having fun, and I think that is very challenging. We always want to provide the best advice and we want people to leave happy, but not everyone is happy right now.
Mm-hmm.
I think that's just a reality. Just imagine, if you're coming out of a mortgage at, 1.5 to 2.5, 3%, and your new mortgage is 6%, you're not going to be running to the bank and be like, I'm so happy.
Mm-hmm.
You're going to be like, I'm surviving. You're not thriving right now, by and large. And also with this inflation environment, people are certainly having a hard time. And, one thing we talked about was, is the bank going to start to have losses? Are people going to start missing their payments? Are there going to be foreclosures? In my opinion, the rates are going to need to be high for some time more before we're starting to see people really in a loss position.
Mm-hmm.
So I think it's a kind of a wait and see, but I really encourage people, if you're kind of in a hard spot and you own a home, maybe a refinance is the right thing for you to do.
Yep. Or maybe just sell.
Some people need to sell.
Yep.
And due to the amount of inventory on the market, and we just heard from James Dwyer, a realtor here in Halifax with Engel and Volkers. Mm-hmm. I said it because you don't like saying that name. There's not enough inventory on the market. So I think that if you're in a challenging position, listing your home is okay.
Yeah. Yeah.
Sell your home. Maybe then you can buy another home with a smaller down payment. Sometimes people cannot refinance for whatever reason. And with a refinance, you can only refinance up to 80% of the market value. But if you sell it, you'll probably still retain about 95% of that sale price because you still have to pay your realtor.
Mm-hmm.
And then maybe you can do a 5% down on a new home.
Yeah.
So maybe you can access more cash per se by selling and buying.
Mm-hmm.
That's an option.
Yep.
And maybe when you buy, you can buy a less expensive home.
Yeah.
They really do exist. We talk about maybe buying in a more rural area, further out of town. That could be an option for some people.
Do you find that people often come to you, and you guys do an outreach, obviously, mm-hmm. through email, and you and this is part of why.
And we do a lot of calls.
That's right. So
sure.
this is why you want to talk to your clients on a yearly basis, on an annual basis. But I'm sure that you reach out to people at times, and they sound pretty desperate when you first started talking to them. You get them in, you do a review, and you go through some options, and they go, wow, I didn't realize that I had some options here.
Totally. And I think sometimes that, is a refinance.
Right.
And sometimes it's a midterm transfer. So I want to talk about even a meeting that I had today. Obviously, I'm not going to breach anyone's privacy, but I had a couple in that bought a house a couple of years ago. And we believe, their property value went up $100,000 from last year until now. They had a very good, healthy down payment. They didn't just put down 5%. They put down 20% or more. And they are in a variable rate. And they're like, what should we do? We have a very, very good variable rate. And what I consider a good variable rate is anyone at like prime minus 90, 95, 100, 105. So a very good variable rate. And, they're considering either converting into a fixed rate with their existing lender, or potentially doing a transfer out of their existing lender into a new lender and generating the penalty. When we do a transfer like that, we can capitalize up to $3,000 of the penalty, and then they were going to pay out the rest of the penalty. So I think the penalty was like $6,000. So we're going to capitalize $3,000. They're going to pay out $3,000 out of their account. And what we were trying to determine is the rates that they were given in terms of doing a conversion. Is that better than doing a transfer, or is doing a transfer out at a lower rate and paying the penalty make the most sense? And we really talked about, 3 options. One is obviously converting with the existing. One is doing a transfer out to a new institution and becoming a new customer again. And we know sometimes new customers get better rates than existing. And then the third option is basically doing nothing.
Right.
And doing nothing might be considered ostriching. I know,
ostriching. That's the new term we coined.
We love saying ostrich. But sometimes that's okay. And especially at prime minus 100, let's say, somewhere in that range, it is okay to stay the course. I'm in a variable, you're in a variable, and variable rate mortgages are way more popular even in the last month as they have been in the last 6 months. The reason being is because the variable rates and the fixed rates are almost the same again. There was a lot of disparity where variable was much more expensive than fixed, but it's not now. Many more borrowers are taking a variable because it has the flexibility to either break the mortgage and pay only 3 months interest to get out, but you can always convert with that existing lender down the road, especially if the rates do go down. So I can tell you, variable, way, way, way more popular today than they were even 2 months ago, 3 months ago. So that's why it's really important to talk about the type of rate product that you have, the type of rate product that you want to go to, what's happening in your life, and everybody's situation really is different. Everybody's income is different, everybody's credit's different, everyone's assets are different, and I think really planning out what's going on is really just so important.
Yeah, and the bottom line, like you said, don't ostrich. Open your mail, have the conversation.
Talk to a professional.
Talk to a professional. Seek somebody out. Doing nothing is never the answer, ever.
No, and I think sometimes people want to avoid their situation. You know what I mean? Nobody's situation is the best right now. No one's having the best ever time, I don't think. And that's why it's really important to talk to your spouse, talk to the professional, and really make the best plan going forward. And I think just teeing up our financial literacy month, November is a great time to really look at your finances. And I'm going to tee this up that going into the end of the year, holiday can be very, very challenging for people, Todd. Just around even like what the costs are and, overspending all these things. And we're going to talk about all of that in November. All
right. So what is the best way for people to get a hold of you?
I think checking us out online is the best way. Check us out at teamclinton.ca/radio. Great place to start. We have hundreds and hundreds of blog posts. You can contact us, and you have all the links to our social media. So you can see Todd and I online. And you can also listen to our show anywhere where you listen to your podcast.
Mortgage 101, your guide to homeownership. Thanks so much for listening, everybody. We will talk again next time.
If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.